Welcome to this week's Explainer. We're continuing our calm, systematic financial documentary tracking the real-world progression of our Robo-Forex Real Cent account. As you know, we're on a long-term journey to scale this automated system from a starting baseline of 2,500 cents all the way toward our ultimate objective of 10,000 cents.
And let me tell you, week 26 became a massive, genuine stress test for our automated EURUSD strategy. We didn't just experience standard market ripples this week, we saw intense waves that directly challenged the very core programming of our expert advisor. So, what exactly triggered this turbulence? Well, shifting macroeconomic conditions were the primary culprits. We had a really potent mix of changing Federal Reserve expectations, fluctuating Treasury yields, and sudden US dollar movements as the broader market tried to digest some complex economic data. All of this dramatically spiked intraday volatility and aggressively challenged our automated positioning.
The road to 10,000 cents.
Before we dive into the specifics of that turbulence, let's establish our baseline progression. The system is steadily pushed to a total lifetime growth of 4.41%, and it's absolutely essential to remember that this account trades exclusively on the EURUSD pair using strictly predefined systematic rules without any discretionary human intervention whatsoever. It is entirely on its own.
The macroeconomic stress tests.
But of course, markets are rarely a straight line upwards. As complex economic data interpretations hit the wire, they dragged EURUSD prices sharply and aggressively downward. For an automated system, a sudden unidirectional drop like this is the ultimate trial by fire.
And the mathematical consequence of that adverse move was striking. The downward action temporarily but severely fractured our account equity from our actual balance line. It effectively plunged the account into a very deep valley of floating drawdown, visually representing a massive spike in open, unresolved risk.
To put a specific number on that downward pressure, it generated a weekly maximum drawdown of 13.82%. This provides a stark, undeniable reminder of the reality of algorithmic trading. When the market moves heavily against your open positions, the floating loss can become highly significant very quickly.
The strategic recovery phase.
Now, rather than reacting emotionally to that slide, the expert advisor simply executed its predefined recovery rules. To protect the overall account, the system absorbed a heavy realized loss of negative $161.95. But almost immediately following that, it executed an aggressive, highly calculated recovery buy trade that successfully closed for a massive positive $178.41.
This juxtaposition is absolutely crucial to understand. While a 1788.41 cent recovery trade demonstrates incredible system resiliency, we have to be totally clear about this. Algorithmic recoveries like this are never guaranteed. They absolutely should not be interpreted as low-risk trading. Navigating out of that valley carried significant underlying risk to the account's capital.
Week 26 Account Progression.
Having survived the macroeconomic storm, we can objectively review how the math finally shook out. Despite those extreme floating losses we just talked about, the calculated recovery logic secured a gross profit of $193.50, which successfully outpaced the $161.95 in gross losses it had to absorb.
Netting all of that together, the systematic execution resulted in a definitive, incredibly hard-fought weekly profit of positive 31.55 cents. It might not have been pretty, but it was mathematically effective.
Looking at the comprehensive metrics for the week, that translates to a solid 1.22% gain, achieved over 14 total trades. It really stands as a testament to the strategy's viability, proving it can hold up under intense, real-world pressure.
Because the system successfully absorbed all that volatility, the overall account balance has now climbed to a brand new high of $2,610.29. So, even through the storms, we're bringing this account ever closer to our 10,000 cent objective.
To quickly summarize this explainer, we documented how a severe 13.82% floating drawdown was systematically managed into a 1.22% weekly gain. We locked in 31.55 cents in profit, bringing the balance up to $2,610.29 and successfully elevating our overall lifetime growth to a steady 4.41%.
As we wrap up week 26, you kind of have to wonder what new macroeconomic storms are waiting for our automated system next week. Whatever happens, we'll maintain complete transparency,
documenting every new peak and every deep valley. Because our philosophy for this documentary remains completely unchanged. Real accounts, real risk, real progression.